So you want to learn how you can actually scale your skill set when trading Forex. Well, guess what? I have a video for you. In this video, I'm actually going to be showing you how you can literally use the Elliott Wave theory that you probably hear so much about. And I'm going to actually show you how you can actually use this to help find when the next move of reversal or the next move of the impulsive wave will happen. Or I will show you guys how you can pretty much scalp any and every single move inside the market. If you aren't already, make sure you do me one huge favor and subscribe to this YouTube channel if you want to learn more on Elliott Wave theory. For those that don't know who I am, I go by the name of Solo E, and I am actually a singer, songwriter, producer, and an entrepreneur, and also, of course, a Forex trader. So I'm definitely going to be showing you guys, hands down, how to use Elliott Wave theory. As far as me, I use Elliott Wave theory, honestly, 90% of the time of when I'm trading. A lot of people see me use this when I trade crypto a lot. So if you aren't, again, subscribe to my YouTube channel if you want to learn more. So let's go ahead and dive into it. Let's learn everything that you guys need to know about trading Elliott Wave. Now, one more thing I do want to mention, if you guys want to sign up with the broker that I use, which is called Hanko Trade, the information is down there, down below. You can sign up with them. The spreads are tremendously low. You can pretty much trade any indice with the small account size, anywhere from 100 to about 500, even $1,000. So if you ever want to trade any indices or even any Forex pairs, definitely check them out. That information is down below once again. All right, so when it comes to trading Elliott Wave, you pretty much have two bread and butter stone waves. You have what we call a motive wave, and you have what we call a corrective wave. Now, your motive waves are going to be your impulsive legs, impulsive waves, which is known as an uptrend or a downtrend. Your corrective waves are going to be your pennants, your symmetricals, your triangles, your diagonal patterns, pretty much everything that you guys probably heard of when it came to wave theory, if you even heard of wave or knew what wave theory is. The other terminology a lot of people use is your pullbacks, retracements, or consolidations in the market. Now, all of these can be literally essentially measured by using one simple thing, which I call ABC legs. Now, the ABC legs are pretty much everything that is formed from harmonics to wave theory to a lot of these other wave pattern recognitions. So if you guys want to literally use that tool, the ABC tool, which is on TradingView, if you don't have TradingView, you can sign up for TradingView as well down there. But when you guys do go on TradingView, you have this option here. Now, I'm actually going to pull this over here on the left hand side. As you guys see, you have this toolbar here. Now, when you guys click the toolbar, you will pretty much see a pattern symbol. You will select that, and then you will want to highlight the Elliott Wave impulsive wave, or the Elliott impulsive wave, which is the 1, 2, 3, 4, 5, the Elliott triangle wave, A, B, C, D, E, and then we're going to skip this one and we're going to go to the correctional or the correction wave, which is the ABC. So these are the ones I use when it comes to trading, especially trading in general. So how does this all work? Very simple. So the very first thing is, when you guys think of any uptrend or any downtrend, and I'm talking about a heavy up or a heavy downtrend, you're going to essentially have 5 waves inside this uptrend or downtrend. So if you pay close attention here, what it is wave 1 is going to always be an impulsive wave. After you get wave 1, you will get what we call wave 2. Now, a lot of you guys say retracement, pullback, consolidation. That's basically what wave 2 is. So inside of wave 2, you will have what we call a corrective wave. A corrective wave could be measured either known as an ABC leg or an extending corrective wave, which is known as an ABCDE leg. So inside of these two pullbacks, you're going to see corrective waves. So just to refresh everybody and go back, when you guys think of any pullback or any retracement from a uptrend or from an impulsive wave or from a downtrend, you're going to have that pullback, and inside that pullback, there's going to be one of these patterns forming, whether if it's an ABCDE pattern or if it's an ABC pattern. So these all can be measured, right? So after you get that that second leg, or that second wave, which is this wave right here, the second wave is always going to be your corrective wave. After wave 2, you will get wave 3. Now in wave 3, they say that wave 3 is supposed to be the longest wave in an impulsive leg, or in an impulsive wave, but not the shortest wave. So as you pay close attention, you will see from wave 2 all the way up to wave 3, look how long it is. Now, inside of wave 3, you will get smaller corrective patterns. Of course, it's a mirror effect. If you trade this on the 4-hour, you could do this on a 1-hour, you could do this on the 15-minute, the 5-minute, heck, even the 3-minute, even the 1-minute, even the 12-minute, whatever time frame you guys trade on, you can do this on any time frame. So what I'm going to tell you is that everything can be measured. You just have to make sure whatever time frame you're going to trade on and mark up your charts, you stick to just that time frame. Don't go on the 1-hour and then go on the 5-minute and then go back to the 15-minute, then go on the 1-hour and trying to mark up all of these. Stick to the 1 hour, and that's clearly all you have to do. So after you catch wave 3, wave 4. Now wave 2 and wave 4 are going to be your corrective waves. After you get these two corrective waves, your final wave will be wave 5. Now when you guys actually look at the market live, you start seeing stuff like this happening, right? You start noticing, oh, I got a head and shoulders pattern. What is going on? Oh, this is a double top, or whatever you want to say. Or, oh, this could be a harmonic pattern, right? Well, essentially what really happened was Elliott Wave theory was formed, right? You have your impulsive wave, your motive wave, and then this is actually what we will call a corrective wave, because after the 5th leg is completed, which is here, you will get your move called the ABC move. And that's what I was saying earlier in the video. So, you know, when you look at any head and shoulder pattern, you can now sit here and say, oh, that was the end of an impulsive wave without me even noticing that. So when you guys go into looking at all of these price action patterns, you start seeing inverted head and shoulders or head and shoulders, you're like, oh, now I know that this is the end of an impulsive wave. Let me do my measurements to see if I can catch these moves. That's basically what happens. So how do I actually trade this? Very simple. If we draw this out, right, let's go ahead and remove all of these drawings and we draw this out. So how it works is we're going to use the Elliott Wave impulsive pattern. So we're going to do this. Let's start off with this actually. So we're going to say this is wave 1. Wave 2 is going to be a corrective wave. So I'm going to actually draw out wave 2 right now. So we got 1, 2, and then 3. And then this is wave 3. And then now we got another corrective wave, because this is going to be wave 4. And this could be an expanding flat. 1, 2, 3, 4, 5. And then we got wave 5. So now what just happened? So let me go ahead and draw this out. Actually, I was trying to draw expanding, but I draw basically a triangle or a channel, you guys can say. But what I wanted to do is show you guys how effective this can work. So basically what ended up happening was we created a wave 1. Wave 1 is this impulsive wave right here. This is wave 1, right? Let me go ahead and use the text message. We're going to say wave 1. So this is wave 1 right here, right? Now wave 2 is going to be your corrective wave. After wave 2 has formed, you're going to get your next impulsive wave, which is going to be wave 3. And then after wave 3, you get your next corrective wave, which is wave 4. And then the final wave is going to be wave 5. So now as you see, we pretty much got wave 1. So after wave 1 has been formed, we got a corrective wave. Now inside of this corrective wave, this is where I start scalping everything. So once I found out that this impulsive wave had ended, which is very simple. If you guys want to learn more on price action patterns, just subscribe to my YouTube channel. I talk about it all the time. I talk about when you start seeing these double tops, these inverted head and shoulders and so forth, and you're basically seeing prices failing to break the previous highs, that's telling you that structure being made, and that's telling you that we're possibly looking at a corrective pattern being formed. And once we get that, that's when I start scalping the market. Now, inside of corrective waves, we have what we call ABC legs. Now, ABC legs are formed off of everything, right? So if you guys, let's say, jump on a 5-minute time frame, and let's say you wanted to trade one of these legs, you can. Basically, what happens is market will come up, and then it will pull back, and then it will go back up. Now, a lot of people don't know this, but patterns are always forming in every single time frame, and this is why so many people do get confused. What I like to do is, once I can catch a pullback inside of this corrective wave, I then take out my Fibonacci. Now, my Fibonacci is going to be the gold mine to Elliott Wave trading. A lot of you guys don't know this, but when it comes to harmonics, Elliott Wave, and probably a lot of these other theories on calculating actual levels and calculating actual structure, the Fibonacci is where everything came from, because these are all measurements that can be predicted from the market. So if I was to take out my Fibonacci and draw my Fibonacci from the beginning of this leg, which is here, to the end of this move right here, and let's just go ahead and fix this up a little bit, to the end of this move here, if you guys pay close attention when we zoom in, if you guys pay close attention, you will see that my Fibonacci, I'm using my Fibonacci to give me my measurements for the next impulsive wave. So that being said, what do I mean by that? If you guys don't have this Fibonacci settings, you can sign up for a free course down below. I have that on there. But when you guys look at this, I'm not using the Fibonacci for retracements. I'm looking at the retracements and I'm realizing that, oh, it came and hit the 618, but I'm not trading off that. What I'm actually doing is trying to figure out when the next impulsive move will end, which would be either the -27 or the -618. Now, if you pay close attention, it had hit the -618, and that's always going to be my gold mine for using my Fibonacci TP levels. So it hit that, and this is me scalping. So now I got all of this off of 1 hour, and now I'm jumping on in 15-minute or 5-minute, and I'm looking for these pullbacks. And as you see, we pretty much got it. So let's take this on a live market. Let me show you guys how to trade this on a live market so you guys can get the full glimpse of everything. All right, so right now we are currently on a live market, and I want to show you guys exactly what I was saying earlier, how effective this can be. So if you guys are literally looking to, let's just say, figure out the next impulsive wave, remember, market will always create what we call an impulsive leg. After that, we'll get a corrective pattern, and then we'll get the next impulsive, and then we'll get a next corrective, and then the next impulsive. But this move right here, these all can be measured from previous data. And that's clearly simple. How do we do that? We draw our Fibonacci from the beginning of the impulsive wave to the end of the impulsive wave, which will be the beginning of the corrective wave. And then we will figure out those two levels that I had showed you guys will be those two levels that we use to figure out the end of the next impulsive wave to start the beginning of the corrective wave. So if we draw Fibonacci from here all the way down to here, and I extend my Fibonacci out, wow, look at this. Look at this. If you guys pay close attention, clearly it had hit these levels right here. This -618 and this -27 area. So if you pay close attention, you will literally see that after it had hit that area, it will go the other way, and then you will get another corrective pattern. And that's basically how this whole process works. So that's pretty much how I use this when it comes to trading Elliott Wave. Now, if you guys want more videos on Elliott Wave, all you got to do is subscribe, like, and comment, and let me know, and I will give you guys all those gems. But other than that, I appreciate you guys for tuning in this, and I will see you guys again. Once again, your boy Solo E checking out. See you guys in the next video.